Welcome to Forex Films. Today is August 1st, 2011. I've had some interesting things happen today. We finally got the U.S. debt situation bipartisan agreement worked out yesterday, and the House of Representatives is going to be voting on that today, and the Senate will end up voting on that tomorrow. And that could be big news for the US dollar. We're actually at a potential turning point in the US dollar index, where we could start or continue a major reversal higher if that did indeed start just below 73 on the US dollar index back in May. So where we're at right now could lead us higher, but support lower begins at about 73.25, 73, and then perhaps not until 72, 72.50. So really, US dollar direction is extremely important to all pairs right now. Risk and everything is following the US situation at the moment. And a major beneficiary of this is the Australian dollar. Here we have a chart of the Aussie US dollar, and we have major event risk tonight at just after midnight, 00:30 for people in New York Eastern Daylight Time. We have the Reserve Bank of Australia rate decision, and that's really expected to hold steady. However, we have had some increase in inflation measures, and the main thing we will be looking for is the commentary from the Reserve Bank of Australia. What can really change or not necessarily change, but boost the direction of the Aussie dollar is hawkish commentary that could lead to a rate increase in the future, or dovish commentary that leads to rate cuts. What we're really looking at here is any commentary like that to give us direction. But if you have been looking at my Elliott wave analysis, what you can see that we have here is on the medium term, down here where I'm circling right now, wave X 3-wave pattern ended, and we've been looking like we're rising probably in a Y wave higher. And this could be a 5-wave movement. And we have the end of wave 1 here, wave 2, wave 1 of 3, 2 of 3, and here we have 3 of 3. Now, we could say that wave 4 ended here, but I don't really think that's likely, just because of how deep the correction for wave 2 was. So this will probably be consolidation pattern, quite possibly a triangle. So we could go lower, continue to go lower here, not necessarily making a new low, and then higher once again, lower, finish out the triangle, and then finish higher and the last leg higher before major reversal. Because this, if we're actually in a Y wave, that would be 3 waves higher. C wave is 5. So that would most likely only take us to 1.12 area, which is something that I've been looking at for a very long time as a final target for this pair. And one more drop in the US dollar would likely be around 73.25. So really all these things are coming together and giving us a path forward that's high probability for the future. So if the commentary for the Reserve Bank of Australia is dovish, that will be short-term bearish for the Australian dollar. I think no matter what, we're going to end up making a new high, but maybe we could end a three-wave correction somewhere down here about 108.50, and if it does get down there or back closer to 108, it's probably an excellent chance to buy before the last move higher. So let's look at some other pairs. Euro US dollar. And I think this move surprised quite a lot of people, but it's been in my Elliott wave analysis since Monday. We have really most likely a three-wave movement here, three-wave movement down, followed by a five-wave movement up. And so this would be a correction A, B, C. Then we have another possibly three-wave correction down, which we could still drop all the way to 1.41 or just above, like 1.4130 is really what I'm thinking more. We'll see though. This is very bearish candle. We'll see how much continuation we get on that, and then maybe we can move to one final high before reversal. Dollar yen. We actually had a new all-time record low in this pair today, which is very interesting because there were quite a few people that were trying to count this as a five-wave movement up from the tsunami, earthquake, nuclear disasters in Japan, which really goes to show you that fundamentals aren't in control here because of how bad the situation is in Japan and has been for so many years, but the yen continues to appreciate. To me, this looked pretty obviously like a three-wave pattern, which let us know that we've got more record lows coming. And this, I do not believe, is the end. I think we'll continue even lower. I count this as a 1, 2, and then we're in the middle of a third wave. But overall, this wave is actually a wave 5, but not a terminal wave 5, meaning that it's a wave 5 really of a larger wave 3 of 5. So after this finally terminates its fifth wave pattern, then we'll correct higher in a fourth wave and then again drop to more record lows. If you look at this pair for the last few decades, you can really see that we've been dropping pretty much that whole time, and we can expect this to have continuation for years. And quickly take a look at Euro Pound. Euro Pound has made what looks like a five-wave movement up, which could be a C wave on longer term charts, but this move here is really quite questionable. It doesn't look at all like a five-wave movement. So we would need to head higher from here, but it's going to take a lot to do that, and it doesn't really look like the Euro Pound is going to be able to have enough time to make that move before risk aversion really sets in. So we may have already started the bear move in the euro pound. We'll just have to wait and see. Dollar Swiss is also extremely interesting, considering we've had an obvious three-wave correction here, and then everything since there has been kind of questionable. And here we're still inside this channel, but if you count this as wave 1 like I have been, it could easily come out of this channel for its final low before moving higher. But we have a good chance that this bounce from the channel is actually the final low, and I'm long this pair with my stop is already at break even at 77.50, so keep your eye on this pair. This is right past equality with this move down here, so I really feel strongly that this pair needs to move up. I actually just published new Elliott wave analysis on this pair earlier today, so check that out. And last thing on this is when gold turns, this has had correlation with gold, so a gold turn could mean a Swissy turn or vice versa, though the timing isn't exact. Thanks for watching, good luck trading, and send me any comments or questions.